Welcome to the Daily Market Recap, a detailed review of the market structure and the key support and resistance levels in the S&P 500 E-mini. Today is Wednesday, November 20th, 2013. After breaking out above the prior multi-year high on November 13th, S&P futures rallied up to a new multi-year high at or near 1800. During the rally to the psychological 1800 price level, buying interest waned, and the broad benchmark index sold down below the previous day's low. During the sell-off, we noted that there was initiated selling associated with the 1793 price area. We also brought to the attention of our listeners the likelihood of the S&P pulling back to the prior multi-year high at or near 1773 before making another attempt at auctioning back to the multi-year high and possibly continuing the rally into the end of the year. During today's session, S&P futures sold below yesterday's low and pulled back to retest the prior multi-year high, trading down to 1774. Coming into today's session, we were focused on micro resistance up at or near the 1793 area, as well as the potential of the S&P breaking down below 1784, 1782. Overnight, the S&P pulled back to what had been the prior day's low at or near 1782. The market held support and rallied back up to the minor resistance level, trading up to 1794, 1793. During the retracement to minor resistance, buying interest waned and S&P futures sold down from the high. Prior to the FOMC announcement, the market traded in a very narrow range, dominated primarily by the high-frequency market maker algo sequence. There was a second attempt at retesting the low, and the S&P auctioned back up to 1788. Selling pressure entered the market again, and the S&P pulled back and initially took out stops below the previous day's low, which are typically located approximately 2 points below prior support. However, during the retracement up to 1785, there was a resurgence in the selling pressure, and the S&P sold down and breached prior support. On the uptick to the previous low, there was responsive selling. The selling pressure increased, and the S&P traded down below the prior 1777 support level, and we observed climax selling as the market traded down to retest the previous multi-year high at or near 1773, 1774. S&P futures rallied modestly off the low, trading back up to 1781. However, the market was unable to trade up above the prior low and auctioned back into the previous trading range. Coming into Thursday's session, the key minor resistance level is located back at what was previous support at 1782, 1784. To the extent that the S&P continues encountering resistance on a retracement to that level, we could expect to see the market trade back down and retest the low and possibly sell down to 1770. As you can see during the up move, the 1770 price level represents a cluster of trade that developed prior to the breakout that eventually resulted in the S&P auctioning up to 1800. Resistance is likely to be encountered if the S&P trades back to 1793, 1794, and we would not expect to see the S&P easily trade above that level. There is a greater likelihood that the initial retracement will encounter a lack of buying interest and the market will pull back again into the developing trading range. Currently, the slope of the Kalman filter is declining, and in order for the market to resume its previous consolidation pattern, the S&P would indeed have to trade back above the prior low and auction up at or near the midpoint of the developing trading range. That concludes our recap for the S&P 500 E-mini. If you would like to follow our real-time commentary, we invite you to visit us online at www.followthebots.com. Log on and join us some morning at the open.